is Wednesday, July 31st. We're now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here on Malta. I'm Nicholas Jackman, standing in for Leah Heilpern. Jose Maria Macedo and Jason Fernandez, they'll be providing us with expert views on today's show. But first, we'll take a quick look at some of the market indicators. The cryptocurrency index CCI 30 has edged slightly up to approach the 3,800 point mark. The index has dropped by an overall 20% in July, but it is up by more than 70% year to date. The 30-day Bitcoin Volatility Index has continued trending south as crypto markets begin to stabilize. It stands at just slightly more than 5%. The CoinMarketCap website's daily traded volume indicator has remained below the $50 billion level throughout the past 24 hours. The Messari website's Real 10 volume measures at $1.43 billion. The Bitcoin Dominance Indicator has been trending at just slightly less than 65% during the past 7 days. The top 5 digital assets are all trading in the green. Bitcoin is up by nearly 3% as the crypto king climbs towards that key $10,000 psychological level. Ether has claimed the ground above the $210 mark. XRP, up by almost 3%, is facing resistance at the 32-cent price level. Litecoin trades at more than $90 on a daily increase of more than 3%. Bitcoin Cash posts a gain of 5%. Its total market capitalization is now almost neck and neck with that of Litecoin. The Coin 360 heat map is green across the board as markets are driven by bullish sentiment. According to the Token Spread website, the CEX and XMO exchanges, they've got the biggest price difference for Bitcoin and the dollar pair, and it is 1.3%. As usual, the XMO exchange has the biggest spread, and it's 0.23%. And to wrap up this section, we'll take a look at some of the characteristics of Civic. This is an identity ecosystem looking to give businesses and individuals the tools to control and to protect their identities. The platform provides multi-factor authentication without the username or password by using blockchain technology and biometrics on the mobile device. The project raised $33 million in the 2017 CVC token sale. This virtual currency is used for securing low-cost access to identity verification through the blockchain. Its price peaked at almost $1.70 in December of 2017. Currently, it trades at just slightly more than 5 cents. We'll now review the performance of cryptocurrency asset classes as grouped by the Messari website. The infrastructure group is the most bullish asset class today, with a gain of close to 3%. There's green across the table. The media and entertainment category stands 1.4% in the green. The Theta token is one of the few assets that are trading in the red today. The financial sector is up by approximately 2%. The Link token is one of the top bullish drivers with a double-digit surge. The currency category is green across the board. Its overall gain measures at close to 3%. And lastly, the services section shows an increase of 1.3%. The majority of the assets, again, driven by bullish sentiment. This is where the 5 major cryptocurrency categories stand so far this Wednesday. Let's now take a quick look at some of the most significant moves among the top 100 digital currencies. We'll then be back with our crypto experts after a short break.
180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
And we're back with our experts, Jason Fernandez, COO and co-founder of AE Token, and Jose Maria Macedo, head of advisory at Amazits. Good to have you both on the show, gentlemen. Great.
Thanks for having me.
Brilliant. We're going to start today's discussion just talking about volumes in effect. Okay, so crypto, they're mostly trading in the green. Gains are generally limited. Trading volume is lower than what we've seen during recent months. Do you agree with the view that this could be attributed to traders stepping away from the desk and heading off on their summer holidays? You, Jose. Okay, we have a slight issue with sound. We're going to pass on that question to Jason, please.
So, well, to some extent, I think that might be the case. But we also know that some of this volume has been inflated, right? So CoinDesk recently did a story where they interviewed somebody who was talking about how a lot of coins had essentially paid him to artificially inflate their volume. But still, when generally speaking, there's a inflation of volume happening all the time. So when there's a drop in that volume, I think it still tells us something. And I think the main reason is that like some excitement has gone out of Bitcoin, and we see this happening pretty much every time Bitcoin starts trading sideways. And so far, it's sort of stayed firm in the mid 9,000s. Even though there have been some bearish attempts to push it much below 9K, that really hasn't, come to pass. A lot of times, Bitcoin has been in the upper 9,000s, and some money, I believe, will start flowing into Bitcoin. I mean, it is. We know that the Fed is likely to cut rates soon, and that should send the dollar lower. And that would move some money into Bitcoin. So some money should probably start flowing into Bitcoin practically immediately, and cryptocurrency practically immediately, because people in Forex right now are going to want to insure themselves against the Forex losses. So I think we're going to start seeing a turnaround pretty quickly, and then we're going to start seeing it sort of firm up once the Fed rate cut actually happens and goes through.
Do you believe, Mr. Fernandez, that the $10,000 level creates a FOMO which could result in increased volume?
Actually, I don't think so. I mean, we've seen it as high as 14,000 just in the recent past, in the last month and a half or something. So I think that you're not going to really see FOMO until it starts getting up to numbers of 13,000, 14,000. I mean, it's good to see Bitcoin in the four digits, but I'm not sure that that's going to create the real excitement. But I think the thing that is going to create the excitement is the amount of people that are going to move in now because of the Fed rate cut. About amount of money that moves in, and you're going to start seeing Bitcoin rise really quickly. And I think that sort of velocity, it's really it's not whether it crosses the 10,000 or not, it's really how fast and the velocity with which it crosses it that's going to create that FOMO.
Excellent. Thank you, Jason. Jose, let's just test to see, is the audio working there? Can you hear us? No, we're going to stick with yourself, Jason. Let's follow on to the next question. Jeremy Allaire, CEO of Circle, he was questioned yesterday about crypto regulation in a hearing before the Senate Committee on Banking, Housing and Urban Affairs. Senator Sherrod Brown, he compared crypto with subprime mortgages that led to the financial crisis in 2008. What are your thoughts on this comparison, Jason?
So I don't think it's a valid comparison. As I've said before, when it comes to ICOs, many people, whether they realize it or not, were basically funding startups. And startups do have a high failure rate, particularly when you're talking about exotic technology like blockchain, where it really hadn't been proved out at the time. So I don't think people were quite cognizant of the risk of their investments. But I don't think that it's, if you consider the high failure rate among startups, I don't think that the failure rate among ICOs is too far afield from that. And the number of successful ones that have been created, like let's say the top 10, top 20 ICOs and companies, coins that have been created, if you consider how the velocity with which that sort of wealth and that sort of industry has been created in just a few short years, that actually shows how robust crypto is, as opposed to saying that it's some sort of bad thing. Also, I think to compare it to the subprime mortgage crisis is kind of ridiculous because the whole mortgage crisis was caused by events that were set into motion when the Glass-Steagall Act was withdrawn. And that allowed these banks to make risky investment decisions, buying up these subprime mortgages, and that caused the whole crisis. In other words, it happened because sensible regulation that already existed was specifically removed in order to create and enrich sort of certain parties specifically. With crypto, I think the industry needs regulation, but in comparison to the scams that happen, on Wall Street, I think crypto has been remarkably transparent.
Very good. One of the main issues with these Senate hearings is that we've heard a lot of inflammatory comments. Some people describe them as a form of bandwagon propaganda against crypto. Do you adhere to this thought? The same senator, for example, in the Facebook hearing, he referred to them in comparing FB to a dangerous toddler that keeps committing arson. So inflammatory contents may be just looking for a little bit of extra attention, maybe to ring fence a few votes. Jason.
So I don't think, I think that crypto is getting a really bad name. And I think, it's really obvious why that is. Nations sort of have an interest in keeping fiat currency the standard, even if it's fiat that they are releasing as some sort of crypto, as some sort of digital cash, because thus far they've had a monopoly over the creation of money and essentially the laws around transferring that money, and countries within countries have basically had that power, at least among people that exist within their country. And now they're sort of seeing that in this sort of decentralized world, all bets are off. They really can't control this currency, and they don't have the ability to sort of artificially inflate currency prices and things like that. So I think that sort of lack of control and the loss of control is what they're reacting to.
Excellent. Thank you, Jason. Excellent. Jose, can we finally hear your thoughts on this comparison?
I think so. Can you hear me?
Absolutely.
Perfect. Yeah, I think that the only way in which the sort of subprime mortgage comparison even makes sense is they're both risk assets. Otherwise, it's as Jason said, they're totally different situations. Subprime mortgage were basically terrible loans that were made by banks to consumers who should never have been getting these loans because they didn't have the financial ability to ever be able to repay them. And they were enabled by these CDOs, which allowed banks to conduct financial alchemy, magic, which turned out not to be magic, as we found out quite painfully, in which they sort of packaged them together to say that if one bad loan is bad, but if you put 1,000 of them together, that's good. And this in itself was enabled by a lack of transparency of the underlying products and a whole just broader problem of incentives, transparency, and in which sort of the banks are allowed to make short-term profits, but long-term losses are socialized and paid for by daddy or the government or ultimately the taxpayer. So in short, it's a system of middlemen on middlemen on middlemen. And Bitcoin is in many ways the opposite of this. It's a decentralized, censorship-resistant digital store of value. It's not controlled by anyone, and it's sort of fully transparent. So, I don't think the comparison makes much sense. And I think in general, sort of the understanding of Congress and politicians of Bitcoin, obviously the specific agencies like the SEC and stuff have quite nuanced and high-level understandings of these things. But when you hear Congress, I think their understanding of tech generally is fairly low. Even in the Facebook hearing, some of the questions they were asking and stuff. So it's quite difficult to expect them to understand Bitcoin.
Do you think that the comparison, Jose, is more in line with at the consumer level, where people have been borrowing to buy cryptocurrency, investing, risking, as they had done in the subprime mortgage crisis for the initial mortgages?
I mean, I haven't seen much evidence that there's much leverage in the system right now. Obviously there's BitMEX and things like that, but I haven't seen at least any studies or evidence showing that there's a lot of leverage going in or credit going into buying cryptocurrencies. If that does ever happen, that is a problem. But again, I feel like that problem is enabled by a banking system that extends credit too easily rather than by Bitcoin or the underlying asset itself.
Well, I can't see them giving across or filling out a complete business plan telling the bank that they're buying cryptocurrency, but they are taking out loans nonetheless, taking that risk. Okay, let's move on a little. We've heard opinion also in the same hearing that even if the United States did decide to ban Bitcoin, they would not be able to succeed at it. Is this decentralized cryptocurrency beyond the control of governments? Jose again, please.
To an extent, yeah. Bitcoin itself is a decentralized networks, and they're notoriously robust and strong. Stuff like Tor, the dark web generally, are things that the government would have loved to ban, but it's very difficult to do when it's being run on a decentralized network of nodes, interspersed all over the world. But while they can't ban it in the sense that if someone wants to own Bitcoin, I think there will always be a way for them to do so. But they can make Bitcoin's life and adoption significantly more difficult. And I'd argue they're already doing so. There's various ways they can do this. They can do it through draconian and incredibly complex and needlessly complex IRS and taxation legislation. Like the idea that you have to sort of pay taxes on any, even if you buy something with Bitcoin, you have to pay taxes on that. That would sort of completely invalidate Bitcoin's use case as a medium of exchange. They can also regulate every area in which Bitcoin has to touch the real world or the fiat system, right? And this is stuff like exchanges, it's stuff like payments, and it's also stuff like bank accounts for crypto-related companies. Again, this is something it's quite difficult for a crypto-related company to open a bank account in most places. Obviously, there are now crypto-specialized banks, and a lot of crypto companies are acquiring bank licenses, but still, it's very difficult. And then finally, I guess you see governments like India actually considering sort of the criminalization of Bitcoin, which again, it's going to be difficult to enforce, but the having that disincentive there will definitely hamper adoption. If you can go to jail for operating a node, you're probably going to think twice. And then I'd say probably the final way in which they can regulate it is through internet service providers, similarly to what the European Union did to gambling companies who didn't comply with the new gambling regulations. They can just sort of ban customers from going on those websites. And again, there are ways around that. You can use VPNs, you can do all sorts, but again, that's not within the reach of everyone. So again, it'll make adoption much harder. Interestingly, this latter problem, it can be circumvented, and it will become a lot easier to circumvent once we have stuff like Orchid or protocols like that, decentralized mesh networks, which will make the internet much more difficult to sort of identify and route internet traffic where it comes from. Now, finally, I think there's also sort of a game theoretical argument to why they can't ban it. The US, more than anyone, benefited from the technological revolution, the internet revolution. Silicon Valley was and is the center of most technological innovation. They benefited loads from, most of the biggest companies in the world are American. They're based in Silicon Valley, so they better than anyone understand the value that technology can bring to a political system. And the idea of banning Bitcoin or banning cryptocurrencies will basically lock them out of all that innovation. And it's a game theoretical argument that no country can really afford to do that. No country can really afford to ban Bitcoin, not benefit from that innovation, and allow another country to do so instead. So I think they can't ban it, and there are various reasons why. There are various things they can do, but I do think they have to be careful, and they will be careful because of this the possibility of losing out on the innovation.
Jose, do you give any credence to, I guess, reports, allegations that the IRS has gone to other more extreme means in order to hit Bitcoin, regarding to their alleged outsourcing of hackers in order to infiltrate the blockchain. There are some receipts which allegedly show that software has been procured in order to uncover BTC user identities.
I mean, absolutely, they're using that. Yeah, I mean, they're absolutely using tracking. There's various companies specialized in this. Chain analysis is one that does a lot of work here, and they're absolutely using those to try and identify users who are tax evading using Bitcoin. But that's if we want Bitcoin to be a legitimate asset class, that's something that has to happen. It can't really be used for tax evasion. There's going to have to be a way to plug that gap, and in fact there is. It's not a great system to evade taxes or to do criminal activity, and for that matter, because unlike what the politicians say, it's not anonymous, it's pseudonymous, and there's literally an immutable trace of where that Bitcoin's been all throughout history. So very difficult for, it's not ideal for a criminal, I'll tell you that. Cash is much better, despite what Mnuchin said about he doesn't think any illegal activity is done with cash. Cash is definitely specifically the dollar is definitely the criminal technology of choice, and there are a lot of studies sort of backing that up.
Statistically, it's showing that for every $1 of dark web money, there's $800 every $1 of Bitcoin used on dark web, $800 are used for ulterior uses. Jason, we're going to move on again, and this one is more of your own personal opinion, your own feeling about what Bitcoin may be. The lawmakers are showing or appearing a little bit puzzled what Bitcoin really is. Yes, a network, it's a protocol, it's a currency. Please let us know what you think.
So I think it's a bit of all three. Anything that can be ascribed a value can be a currency. And the fact is that Bitcoin and cryptocurrencies are fundamentally different from traditional fiat like dollars and and euros. So no one can really shut them down. If Bitcoin evolved out of a series of precursors somewhere around the 80s and the 90s, and the whole purpose from the outset, the goal was to create sort of a network of participants that could exchange information with sort of this unique type of transparency that Jose was just pointing out. So where you have sort of every transaction would be recorded, every account and every balance contained would be visible to all participants, and of course the network is resistant to hackers. And that sort of makes Bitcoin not really the ideal cryptocurrency for any sort of fraud. Although certainly it has been used, but as you pointed out, also cash seems to definitely be the sort of thing of choice when it comes to illegal stuff. But there were sort of early prototypes of Bitcoins like Bitcoin and B-Money, and neither of these things sort of solved the problem because you couldn't find developers couldn't find a way to make the cryptocurrency both transparent to the public as well as invulnerable to government shutdowns. And that's sort of exactly what Bitcoin is designed to do. But yes, as Jose pointed out also, you can definitely shut down the on and off ramps. So that's sort of one of the concerns that they're certainly seeming to have, because it's also a network and a protocol, and if it's a currency, there's some problems with that.
Appreciate it, Jason. Jose, what's your elevator pitch on Bitcoin? How do you sell it, promote it?
Yeah, I mean, I have to do this a lot, the family questions at Christmas and stuff. So, I mean, I generally try and start like at the beginning. For me, Bitcoin is a superior money technology, but in order to kind of understand that claim, you have to somewhat understand money, which many people don't. And to be honest, I didn't before I got into the space. I think people take money for granted, but it's worth remembering that money itself is a technology. It's a social technology without which we as a species would never have been able to scale up civilization to where it is now. If you read the sociology and anthropology on this, money came about, the best theory that we have is that it came about as a way to scale the tracking of favors. Maybe in a tribe I could do you a favor and then you do a favor back to me, but as the tribe expands into a village and then a city, it's much more difficult for that to be sustainable. So we needed some way to track that at scale, and that's how money emerged. And what you see with this technology is that the thing we actually use as money has also evolved throughout history as society has evolved. There was shells being used by Native American tribes. There was stone discs on the islands of Yap. There was inscribed clay tokens in Mesopotamia. Obviously precious metals used all over the world. And now we've had paper money, we've had digital bank accounts, credit cards, and now crypto. And even our current system of fiat, while it seems innovative and new, it's actually been trialed many times before. The first time in 11th century China, they all failed, by the way, interestingly. And so I think that the main characteristic that money needs in general, obviously it has to be scarce, divisible, etc., is a low stock to flow ratio, which just means that you can't inflate the hell out of it every year, which is obviously a problem that we have with fiat currencies. It's a problem that you have with shells, as you can imagine. And it's why sort of gold has been the only sustainable, robust, money technology with any longevity. It's been used for 6,000 years. And what I think is that Bitcoin is basically digital gold. It's a non-sovereign, global, digital, supply-capped, immutable store of value. I know it's a lot of adjectives, but they're all things that are completely unique about Bitcoin. And you can think of it as digital gold, but it's sort of better than digital gold in every way. It's more scarce, it's more durable, it's more easily transferable, it's programmable. It's obviously it's not counterfeit resistant, it's more counterfeit resistant than gold. And most importantly, it's censorship resistant. Someone can come to your house and take your gold, and the government has done that in the past, not that long ago, less than 100 years ago. It's much more difficult to do that with Bitcoin because it's made of code, not metal. And unlike gold, code can be carried around in your brain, whereas obviously gold can't. So I think that the significance for this is that it becomes, like gold, a hedge on the global financial system, a safe haven where you can store your assets if you don't believe, or at least if you think there's some chance that the global financial system is unsustainable. And there's now significant research showing that Bitcoin is completely uncorrelated with other assets, is even uncorrelated with gold itself. And I think what's going to happen is that Bitcoin becomes increasingly attractive as faith in traditional financial system goes down. In my mind, and this can be seen even in the birth of Bitcoin, right? That's why Satoshi came up with this thing. He inscribed into the Genesis block, "Chancellor on the brink of second bailout for banks." It came about on the back of one of the biggest financial crises in history. The only one that was the same size was the 1929 one. So, Bitcoin's role to me is digital gold, and it's a hedge to the global financial system and to this system of fiat currency, which has always failed in history. It's very difficult for governments historically to resist the temptation to print. So sorry for that. It's not really an elevator pitch unless you're going up some very, very large building. But yeah, there it is.
I was looking for 17 words only. Yeah. This next one is a short one, so we won't run out of time. Just regards to some platforms, they have a different name to the actual currency. It's just a relation, like Ethereum is the network, Ether is the currency. There's talk at the moment, and we're seeing the trending in the Twitter sphere, that Bitcoin doesn't have this, but there are certain factions which are hoping it will. We have Lightning Labs and Square. They're trying to get the crypto community to come up with a symbol for Satoshi. What do you think of this? Should we ask Craig Wright? Jose?
Yeah, I mean, not much of an opinion on this one. I'll sort of let Jason talk, given my elevator pitch went on quite a while.
Jason?
Yeah, I think it's a good idea. Definitely need a symbol for it. Although Bitcoin already has a different name. It's just uppercase and lowercase. Sure. But obviously, you can't really hear that when you speak. So yeah, I'll let Jason take this one.
Jason, what would you like to say?
Well, so I think, obviously Satoshi is the smallest component of a Bitcoin. And I think at some point, Bitcoin is going to have a very, very, very large market cap. And at that point, it would probably only be possible for most people to be trading in Satoshis. And that could probably be the most effectively traded, because nobody really will be sending a Bitcoin over, or even a portion of a Bitcoin, because it's going to have such a large market cap that essentially a Satoshi would all that, or several Satoshis would all be what you were talking about. So in that sense, it would sort of make sense to have a symbol for Satoshi, especially if you sort of forward thinking and think that Bitcoin is going to become so large that, Satoshis are going to become more and more useful.
Wonderful. And finally, just regards to Tezos, the cryptocurrency, it's the most bullish asset today, so we'll focus a little in on it. It comes because Coinbase, they announced it'll list XTZ on the Pro Exchange. What are your thoughts on Tezos? And have Coinbase taken a bit of a risk here based on the fact that XTZ is accused of being a security? Jose.
So I'm not a maximalist. I think Bitcoin's the market leader, and it's the digital asset that possesses the most well-defined narrative. But I don't think digital gold is the only thing that cryptocurrency is going to bring about. I think there are a lot of other use cases, from open finance to Web3, and I think it's at least possible that those won't be built on Bitcoin. And I think the really interesting base layer protocols are the ones that sort of sufficiently differentiate from Bitcoin that it's something that couldn't just be forked in. And those are the ones that I'm most interested in, and Tezos is definitely one of them. I think the governance system that they have, obviously Bitcoin governance is notoriously inflexible and not very agile, which has been a strength of theirs because they've stayed stable. But I think it's possible that in the future, cryptocurrencies will face challenges that require swift and decisive governance, and that like stuff like Tezos and Decred could differentiate itself then, similarly to how smart contract platforms are also sufficiently differentiated. So I know I'm very bullish on Bitcoin and the digital gold narrative, but I think there's a lot of cool stuff that's going to come about from cryptocurrencies, and I think it's not a given that it will all be built on Bitcoin. So yeah, I think Coinbase did a good thing about being considered a security. I mean, I'm not a lawyer; it's difficult for me to comment on that. Obviously, the voting rights and stuff, that's been a problem for Decred as well, and the U.S. has been quite hefty on, quite heavy regulating that. But I think if Tezos, and I think it will, sufficiently decentralizes, I think this will probably end up being a non-issue. So yeah.
I think this voting right consternation is much ado about nothing. I think we're seeing a lot of evidence that a lot of people are in for speculation at the moment and not concerned about the voting rights attached. That's what we're seeing. All right, we're going to finish up with you two gentlemen. I really appreciate you being on the show. Jason and Jose, thanks for being on Crypto Now.
Thanks very much.
Cool. All right, before we sign off, I have a last-minute update from our editorial staff regarding the crypto market. The total crypto market capitalization has edged slightly above the $270 billion mark. The CoinMarketCap website's daily traded volume shows no significant changes. It still measures at less than $50 billion, and the Tezos cryptocurrency remains the most bullish of the top 100 digital assets as the coin trades at more than $1.20. Well, that's all for this Wednesday's Crypto Now live show. We thank Jose Maria Macedo and Jason Fernandez for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at this same time.